FDI limit for insurance intermediaries was raised to 100% in 2019, which was one major step taken to enable them to provide better advisory services to citizens also. I'll just give a snapshot, sir, of the growth of the insurance sector since 2014, and gradually we see also the opening up of the sector. Sir, in 2014-15, number of insurers were 53, whereas 24-25, we have 74 insurers. Insurance penetration was 3.3%. It is now close to 3.8%. Insurance density, which is defined as average insurance premium paid per person in a year, even that has increased. US dollars 55 when it was in 2014, US dollars 97 now in 24-25. Total insurance premium in lakh crore rupees, 4.15 lakh crores in 2014-15. Now it is 11.93 lakh crores. So actually, the insurance premium amounts showing or reflecting the fact that more people are getting covered is seen in these numbers. Opening up the market, opening up the insurance sector has actually helped in greater penetration. There's scope for more. So the question then arises, what has happened after increasing it to 26% first, then to 49%, and then to 74%? Haven't they given you the expected result? Yes, they have given. And they are also giving that story which is opening up that there is need for more. And therefore, we have to increase the cap. The proposal in this particular amendment of removing the upper cap on FDI in the insurance sector will be a seriously big enabler in ensuring Sabka Bima Sabki Raksha. And this will enable global insurance by this amendment that we are seeking to bring. Global insurers will now see that the market is further opening up and they will be able to bring in substantial capital directly and attract more insurance companies into India. So the problem has also been not just opening up or raising the cap. Many companies do not find partners in India who are willing to, join with them and do because of various reasons. So even though there are interest shown, money to come in, technology to come in, better products to be brought into the country, sometimes those don't come because there are not enough joint venture partners which they can search and get into action. So now with this, they will be able to come, abide by Indian laws and set up their own business even if they are unable to get a partner. So what does this do to the policyholder or to customers who want to, consumers who want to go into the insurance market or who want to have them covered, who want their businesses covered? What it does is, sir, greater competition. Naturally, the premiums will have to come down. The classic example we also see, not comparing apples with apples, but solar energy, sir, at one point in time in India used to be per unit 14 rupees 50 paise, 14 rupees 75 paise. Today it's come down to 2. Greater the competition, better the benefit for the policyholder or a new person who wants to take an insurance. The rate of the premiums come down when there is good competition in the market. So these are reasons why we want to have greater FDI participation. We are also standardizing the regulation making process by this very amendment that is being brought in, by introducing standard operating procedures for regulation making and the mandatory public consultation. This will be of importance for members to hear, and a mandatory public consultation on all regulations by the regulator to ensure that the process is consultative and transparent. So, as per the current provisions, intermediary licenses are directly cancelled straight away when found violative of the law. But many of them are probably not intentionally violative. Sometimes oversight reasons also happen. So by straight cancelling it, the process for them to come back becomes very difficult. So we are introducing suspension of intermediary license instead of direct cancellation. And we provide them time for compliance and allow them an opportunity to strategize and streamline their operations during the period of suspension. So this is a progressive step towards having people do their business without the fear of getting cancelled at the drop of a hat, I would say. Provisions for merger of a non-insurance company with an insurance company would promote a simplified corporate structure. Now, even if they are not too different, there are instances in India where the holding company is whose business it is only to run insurance business, also has a subsidiary who's doing only insurance business. We are now today not able to, under the existing scheme of things, they are not able to merge one with the other, the parent company and the subsidiary. So through this we are saying strictly for those who are in the insurance, there shouldn't be a problem if the subsidiary wants to be merging itself with the holding company. This way the companies and the scaling up prospects also go up. Sir, the legal requirement to seek prior approval of the regulator for transfer of share capital has been raised from 1% to 5%, essentially for ease of doing business. There are times when people move just 1% of the share, they have to seek prior permission. It becomes very cumbersome. So we have said, yes, you will have to come for prior permission, but only if 5% of the shares have to be transferred. So this is clearly for ease of doing business. Another similar measure, is when the net owned fund requirement is reduced for foreign reinsurance branches from 5,000 crores to 1,000 crores. Thereby, smaller companies can come in and also spread more branches in the country. This would invite more of the reinsurers into the country for creating greater risk capacities. And also, there are a few questions which were asked about IFSC, level playing field with them. This is a major step towards level playing field. By allowing this net owned fund requirement to be lesser than what it is now, you're actually creating a level playing field with the foreign reinsurance businesses which are set up in IFSC and the domestic tariff area. So you are actually treating both of them, although they play separately. Those who are there cannot play here, and those who are here cannot really operate from there, but the field is evened out. So the last few points on the highlights of this bill, sir. An entity engaged in the business of insurance will have to categorically use the name insurance in their company's name. If they are insurance, if they are assurance, or if they are insurance in some way, reinsurance or health insurance or whatever. So the insurance company which does or which carries forward insurance business should have the word insurance in their name, company's name. So even the intermediaries will have to have the necessary change to indicate that the nature of business or service that they are providing, so that there is no ambivalence or doubt in the mind of people saying are they insurance, are they not? So that structure is being cleared. We've also very clearly said, sir, and this is very important, periodically the central government, in exceptional circumstances, by notification, apply with modifications or exempt totally the insurance intermediaries operating in special economic zones, including IFSA, from the provisions of Insurance Act. This will only be done in exceptional circumstances and for those who are in the special economic zone, not to be doing business in this country, but in those special economic zone and serve their clients elsewhere. So that is very strictly confined to that. So we are also providing, this is a very important point, sir. There have been voices saying will LIC be diluted? Will their stature be undermined? We are providing greater autonomy to LIC so that they can open zonal offices wherever they want, because aligning compliance for its foreign offices can be done there according to that land's rule. But here, they don't need to come to the government to seek permission each time. Even a zonal office has to be opened. No, you have the right, you please go ahead. So that way business decisions will be expedited instead of spending time seeking permission. So I've already mentioned about the disgorging of wrongful gains from insurers and intermediaries. Sir, the maximum limit of penalty on insurers for default in complying with or acting in accordance or acting in contravention of Insurance Act, the regulator has proposed that there should be an increase in the penalty amount. It is currently 1 crore, it will be increased to 10 crores. And now the insurance intermediaries also will be treated equal to the insurance company itself. Earlier there was a disparity. Intermediaries had one rate, insurance companies had different. Now both of them are being levied at the higher level, which is 10 crores, both insurance companies and the intermediaries.